Short exercise 3-7. At the end of the counting period, we're going to calculate how much supplies have been used, and then we're going to enter that transaction into our accounting records as an adjusting entry to update our account balances. So on November 1st, Camden Equipment had a beginning balance in the office supplies account of $1,300. During the month, they purchased $1,400. At November 30th, they had $1,200 of office supplies on hand. So we need to calculate how much has been used. So requirement 1, the office supplies T account has been opened for you. Here's the T account. Enter the beginning balance and purchase of office supplies. Use November 1 as a posting reference to enter the beginning balance, and November purchases as a posting reference to post the purchase of office supplies during the month. So our first task is we have to figure out what type of an account office supplies is. Once we figure out what the type of account it is, then we can figure out the plus side and minus side. So office supplies have a future value, therefore they are an asset. And because they're an asset, the plus is on the left side, the minus is on the right side. So our first task is to put in the beginning balance in the office supplies account. So at the beginning of November, we had $1,300 of office supplies. And then during the month, the company purchased $1,400 of office supplies. So if they purchased more office supplies, is that going to be the debit or is that going to be the credit? Well, it has to be the debit side because that's the plus side. $1,400. November purchases. And the reason why we put the $1,300 on the plus side is because if we have a balance of something, the balance is going to be normally on the plus side of the account. All right, requirement 2, record the adjusting entry required at November 30th. So we have to figure out how much office supplies have been used. According to our records, according to this T account, we have $2,700 of office supplies, but do we really? No. At November 30th, Camden Equipment had only $1,200. So I'm going to continue filling out the T account in this Excel spreadsheet to show you what's going on. So I've recreated this T account and put it over here, but I've also added the November 30th balance, which we're going to put in here. And the November 30th balance is $1,200. So now we have to figure out how much have we used. We had $2,700 of office supplies available, and we ended up with $1,200 of office supplies. So $2,700 minus what gives us the $1,200 balance? Well, that's obviously $1,500 of office supplies. So we had $2,700 available. We used $1,500, so $2,700 minus $1,500 gives us this ending balance of $1,200. So the amount of office supplies we used up is $1,500. So the adjustment will be to lower the office supplies account by $1,500 to get it to the actual balance of $1,200. So we've got $1,500 debit and credit. Now, notice, going back to our T account, the office supplies account, the amount used lowered it. So the office supplies account, which is an asset, is going to be credited because it is going down as we use up office supplies. Now we need a matching debit of $1,500. And the account that's showing that we've used office supplies is called supplies expense. Some companies might call it office supplies expense. To record office supplies used. So by creating this adjusting entry, we have now brought the balance to the correct amount, $1,200. So our last requirement, it says post the adjusting entry to the two accounts involved and show their balances as of November 30th. So posting, remember, we're just going to go to the journal and we're going to take them one at a time. So we're going to start with the $1,500 office supplies expense. Now notice this is office supplies, so this must be office supplies expense or supplies expense. And notice we had a $1,500 debit. And this entry happened on November 30th, this adjusting entry, which gives us a balance of $1,500. Now, if you're wondering why we put the $1,500 on the left side, the debit side, two reasons. We debited it up here, and also, as we use up the supplies, the supply expense is increasing. And as we know, expenses increase on the left or debit side. So we've posted this line. Now we're going to post this line. So we got $1,500 of office supplies going down on November 30th. And now we have to calculate the balance. So we know that the balance should be, according to this up here, $1,200. Let's redo our check. Let's double check our math, make sure it's right. So 1,300 plus 1,400 minus 1,500 gives us $1,200 of office supplies as of the end of the month. So when it comes time to do the financial statements, the income statement, which is revenue minus expense, will show office supplies expense as an expense. And then the balance sheet, which has to show assets, liabilities, and equity, will show office supplies with a November 30th balance of $1,200. So this adjusting entry was necessary to get these account balances to their correct amounts.